Shares of GameStop, as we showed you earlier in this program, are down and down fairly substantially in after-hours trading. The company reported fourth quarter results. As we look at a nearly 17% decline in the share price, those results missed expectations. Let's bring in Michael Pachter. He's Managing Director of Equity Research at Wedbush Securities for a conversation about the results. Michael, I know you think there are many challenges facing this company and by extension the stock beyond quarter-to-quarter earnings. What did you see in the earnings?
They lost share again. The market was actually, or the industry was actually just slightly up for the quarter and slightly up a couple percent. And the quarter had an extra week, which is about an extra 7%. So industry sales were flat to down, but they had more weeks and they were down about 20%. So GameStop lost share for sure. Their software sales were abysmal. They were down 30%. And so, this company is just not going to survive if the share of digital downloads continues to increase. And I see nothing that will slow that.
And have they not made a push into digital downloads? I mean, how could the company at this stage not be focused on the digital sales of video games?
Yeah, just like Apple keeps people from, opening up a store inside iOS, Microsoft and Sony do the same thing. So if you want to buy, a copy of the EA soccer game, they changed the name from FIFA, you can't buy it on EA.com and you can't buy it at GameStop. You have to go on your Xbox or your PlayStation to download it. So GameStop can't participate in that market unless they sell somebody a gift card. And of course they can, but why go to the store, buy a gift card, and then go back home and download it? Why not just click on it on your Xbox? So no, they will not participate in that aspect of the business.
Talk to us about Ryan Cohen. You said at one point the company's gotten lucky with Ryan Cohen investing the company's cash.
I think it's silly that they're allowing him to do that. I guess he is the second coming of Warren Buffett. I'm really old and there's only been one Warren Buffett in my lifetime. I'm pretty skeptical that Ryan Cohen is the second one. I think it's really wrong of the board to give him carte blanche. We haven't seen any results yet. There was nothing materially reported on a stock gain in a quarter where the NASDAQ was, the S&P 500 was up, double-digit percentage. So I doubt that he's done much yet. Maybe he'll take a flyer on something and get lucky, but that's not something I think investors are looking for from a physical retailer. I think if they want to invest in their funds in someone who's going to pick stocks, buy a mutual fund.
And do I understand correctly the company does not hold a conference call and does not provide guidance either?
Not since early 2021, which is probably not coincidentally when Ryan Cohen, imposed control. The last earnings call I think they had was probably the second quarter after he replaced the CEO with the former Amazon guy, Matt Furlong, and then that guy got fired a year and a half later. They had two conference calls with Furlong, and then they went 6 quarters without. We're on our third or fourth quarter since he's been fired. So about 10 quarters with no conference call.
I'm looking at your profile on my Bloomberg screen right now. You have outperform ratings, the equivalent of buys on many stocks. What are some peer group companies peer group stocks that you favor?
The only retailer that I cover is Beyond, which used to be called Overstock.com. They bought the Bed Bath & Beyond brand after Ryan Cohen, helped it go into bankruptcy. I really like that one, actually. They have 3 big brands, Overstock, Bed Bath Beyond, and then they just recently bought the rights to Zulily, which is more of a, children's furnishings. I think they're going to dominate in the next year or two. I think an economic rebound is going to really be reflected in Beyond's results. I like that one a lot.